Today, we're going to be talking about the end of the petrodollar and what that means for gold and what that means for you. For the past 80 years, the global financial system was absolutely dominated by the strength of a currency that will go down as one of the most dynamic mediums of exchange in history. That, of course, is the US dollar. Now, 50 of those 80 years were defined by one of the most significant reasons why the dollar has been so dominant, and that is the existence of the so-called petrodollar. But the established world order of the past 5 decades is now transitioning into a new and unknown terrain, one that will take years to hash out between the world's most powerful nations, and it's all because the petrodollar is no more. Now, before we talk about the implications of this development, let's define terms for just a moment, because you may have never even heard the term petrodollar before. Put simply, petrodollar is a term to describe the dollar's role as the primary currency used for crude oil transactions in the global market. All of this happened way back in 1973 due to a global oil crisis. This was because OPEC imposed an oil embargo against the U.S. simply for supplying Israel with supplies during wartime. Following this crisis, the U.S. and Saudi Arabia came to a mutual agreement to stabilize the situation in a unique way. This agreement between them stipulated that Saudi Arabia would price its oil exports exclusively in U.S. dollars and invest its surplus oil revenues in the U.S. Treasury bonds. Now, in exchange for that, the U.S. provided military support and protection to the Kingdom of Saudi Arabia. Now, I want you to think about this for a moment from the perspective of just how strong all of this made the U.S. dollar. The significance of this agreement, again made back in 1973, and the ways that it contributed to the dominance of the USD, it cannot be overstated. It absolutely solidified the dollar's position as the world reserve currency, and by God's providence, it happened just at the right time before the stagflationary spiral of the 1970s really started to unfold. Now, it's been one of the greatest sources of protection for our economic standing all of this time, and perhaps one of the reasons why our currency was able to stay afloat even when the inflation hit shortly after the dumping of the gold standard in the 1970s. The seas are now changing. Saudi Arabia is looking to move beyond an exclusive relationship with the U.S., and the writing on the wall has been clear for a long time, by virtue of the fact that Saudi Arabia also became one of the newest members of the BRICS bloc not all that long ago. All of this ties into the desire for these nations to de-dollarize. That's another thing we've talked about recently before, and all of this is just one more stepping stone toward making that happen, de-dollarization. Now, here's the thing. A lot of analysts have pointed out that this situation is totally overblown. And to their credit, there are alarmists out there, many of which may very well be in the precious metals industry exploiting fear for the sake of sales, that try to convince everyone that hyperinflation is now imminent because of all of this. Well, that view would be just as erroneous as those that are tossing this news aside like it's totally meaningless. But here's the deal. Most analysts do acknowledge that the expiration of the petrodollar agreement does in fact have long-term potential to weaken the US dollar, and therefore weaken the U.S. and its economy and its financial markets at large. Now, let me get back to that in just a moment, but first, let's talk about the short-term implications of this move by Saudi Arabia. The impact of this in the short term has been, and most likely will continue to be, minimal for the time being. And there are a lot of reasons for this. First of all, even though they've opened up the door to receive currencies like the yuan or the ruble for their oil exports, they will still most likely convert those currencies into US dollars. Why? Because the large majority of the global economy still functions off of the dollar and will for a long time. That means that the dollar will still be in play, perhaps even just as much as it has been before, which of course would not allow for any kind of hyperinflationary scenario right now. But secondly, and even more importantly, the Saudi rial, which is the local currency of Saudi Arabia, is currently pegged to the US dollar. That means that the Saudis still need the US dollar to support their economy for the foreseeable future until a viable alternative takes its place. And viable is the key word there because there's alternatives left and right. But whether or not it will actually be sustained, that's another question. So that's why you can't just take this news and run with it as the final blow to the dollar before its total collapse or something dramatic like that. It's just simply not going to play out that way. But let's go back for a second and talk about the long-term implications that flow directly from the end of the petrodollar. There is no doubt, because a number of nations have made it abundantly clear, that they are actively working toward de-dollarization. In other words, dropping the dollar as the world reserve currency, the main medium of exchange across the board. For decades, a number of significant central banks have been accumulating physical gold reserves for reasons that aren't that obvious. Nations have been working out deals between themselves to remove the dollar as the middleman currency in their transactions. For example, China and Brazil, they just did that in January of 2024. Even prominent European economists that are otherwise supposed to be our allies have been talking about the need to de-dollarize for the sake of their own autonomy for years. China has wanted to replace the dollar since at least 2009, but more than likely much earlier than that. Russia tested, albeit briefly, a type of gold standard in 2022 to show that they don't need the US to make their money stable, and it worked. And now we have the end of the petrodollar. Listen, guys, I'm not an alarmist. I never have been, and TRADEway has been consistently rock solid in teaching against fear-induced urgency and fear buying for as long as it has existed. So I'm here to tell you first and foremost that you shouldn't panic. What you should do is prepare. And you can do that in a fearless, objective way. While the tides are turning, they're turning slowly, at least in a relative sense. And we are held responsible by God to prepare for the sake of our families before the crazy stuff happens way out in the future. 1 Timothy 5:8. Now, in Genesis 47:15, the people of Egypt went to Joseph desperate for help because their money failed. Now, it didn't fail because of some kind of monetary collapse. It failed because they didn't prepare during the 7 years of plenty, and they exhausted all of their resources just a few years into the 7 years of famine. And now their lives depended on a handout from the government in order to survive. Your grandkids might not be in a position 50 years from now to invest in physical precious metals like you can now when all of these negative things start to unfold. This is your 7 years of plenty right now, and you need to take advantage of it so that rather than putting your descendants in a possible desperate situation, they can receive the blessing of their family's diligence and preparedness and feel secure in that no matter what this crazy world may bring in their lifetime. We want to help you do that, and that's exactly what TRADEway's Precious Metals education was designed for, giving you the skill sets needed for making cost-effective precious metals investments and knowing how to accumulate it the right way over time, and how to take advantage of the times of plenty. Well, that's it for today, everybody. If you enjoyed this video and want to learn more, check out the links in the description below, and we'll see you next time.